Welcome back here with Money, Money, Money. Equity markets at historic levels. And this week we're talking about how to pick the right mutual fund by backing the right fund manager. Do you know your manager? Do you know his style? Well, we have Ashish Shankar of Motilal Oswal here this week, and they are helping us with their research to do exactly that. So, Ashish, let's move on to some of the other fund managers. I believe S. Naren of ICICI Pru and Harsha Upadhyaya are two people that you like as well. You like their styles. So,
Absolutely.
We did catch up with Naren. Let's actually hear out first what he has to say on his own investment style.
I'm S. Naren. I'm ED and CIO of ICICI Prudential Mutual Fund. I manage ICICI Prudential Dynamic Plan, ICICI Prudential Top 100 Fund, ICICI Prudential Balance Fund, ICICI Prudential Infrastructure Fund, and ICICI Prudential Indo-Asia Fund. I see myself as a value picker who looks to buy cheap stocks with a long-term view. I believe in looking risk from a counter-cyclical mindset, and based on Warren Buffett's favorite dictum that you should worry much more when people around you are not showing any attention to risk, and when people around you are too cognizant of risk, you should take risk. I have created strategies within my fund management framework to make use of volatility. The entire model of dynamic asset allocation fund is based on the fact that volatility is your friend, and we believe that buying low and selling high is the easiest way of beating volatility. In 2007, pharmaceuticals was one of the most interesting sectors. It was extremely cheap and people found it as a sector not worth looking at. I believe that my experience of investing in 2007 in pharmaceuticals was a very interesting sector pick for me in my fund management career.
Okay, well, he's pretty much known as the contra man of the last street, isn't he? Naren's style always has been to go after what nobody else is running after, at least at the moment. Is that something you like about him?
Absolutely. I mean, Naren's style is very interesting and is different to the other managers that we'll see on the show today. He follows a contra style, like he mentioned, and we've seen him follow the style consistently. And it's very difficult to do because you need to have a clear temperament and you need to have a very disciplined approach. Because when you're investing according to the contra style, necessarily you'll underperform sometimes in the near term because you're buying stocks which are out of favor. And here's where I'd like to add, when you're building a portfolio of mutual funds, sometimes we just, put money across 4 or 5 funds and we think that we have diversified. But our study, what it showed up was that, you don't need to only diversify across different managers or different funds. You also need to diversify across different styles, which means that if you have 4 funds or 4 managers in your portfolio, you should have managers who have different approaches to stock picking. And like I mentioned, in ICICI, it's an overarching philosophy. So all the fund managers in ICICI follow a mean reversion style or a contra style of investing.
All right, quite interesting. Well, let's carry on. Remember, this is that edition of Money, Money, Money when we are tracking star fund managers and some of the best names that have been picked by Motilal Oswal in the study that Ashish and his team have done. The next person on the list, Harsha Upadhyaya, CIO at Kotak AMC. Let's take a look at what he has to say about his style.
Hi, I am Harsha Upadhyaya. At Kotak Mutual Fund, I manage Kotak Select Focus, Kotak Opportunities, and Kotak Tax Saver.
Growth at reasonable price is our investment style. We generally invest in stocks which are growing their businesses, but which are available at reasonable valuations. We focus on companies that have proven business models and sustainable competitive edge. In the industry segments, we look for large, scalable opportunities. We look for companies which are able to capture these growth opportunities by efficient capital allocation as well as be able to generate steady cash flows. Management quality and corporate governance standards are also important to us. Finally, the stock should be available at reasonable valuations. Essentially, the focus is to look for compounding characteristics in a stock. we try to mitigate some of the anticipated risks at the portfolio construction level itself. For example, if you're talking about liquidity risk or concentration risk, we try to take care of that at the construction stage itself by diversifying our portfolio holdings. Anyways, it is always prudent to have plan B ready, as you could encounter unknown risks all of a sudden. Managing a fund is like managing a business. You need to be flexible enough to adjust to ever-changing environment. You build a particular possible future scenario and then start investing accordingly. If that scenario is unlikely to pan out the way you anticipated, obviously you need to course correct. Ego can be the biggest enemy for portfolio managers. One has to accept mistakes and move on. Bajaj Finance. The stock has been a 14-bagger since we invested. This was bought at a time when it was transforming itself from a monoline captive auto finance company into a well-diversified NBFC.
Clearly, Bajaj Finance is a stock that's hit a home run with several of the managers, including the ones that we've just heard from.
Right.
But Harsha, is he sort of what, the Virat Kohli style, go for growth?
Yes, again, Harsha is an interesting manager who's emerged over the last decade, and his fund has done extremely well. Like he said, he follows the growth style of investing. But there are a couple of nuances that I also want to mention about Harsha. Apart from looking for companies which can grow, they also have a bit of a top-down approach. They look for sectors which sectors or themes which can provide structural growth opportunities, and they tend to avoid sectors which where the growth is slowing down. So, for example, they went underweight on IT and pharma much before the rest of the market. So that has helped them, emerge as a winner in this rally. Second, I think they were one of the few AMCs who actually took a decent position in Reliance Industries. They thought that, it's time that Reliance as a stock mean reverts. So we've seen in the journey of the last 7-8 years that there are quite a few calls which have worked for them.
Okay, another quick break on that very interesting note. But we continue analyzing more star managers, and of course the critical question, what sort of a manager do you need to back in the current market environment?